What's up, guys? And today I'm gonna be analyzing Lucid. Now, Lucid are probably one of the worst stocks on the market. The long-term chart shows that they went as high as over $50 a share. And now they're at 4.2. Safe to say that Lucid's have been very mismanaged. Now, there are a lot of issues with Lucid. I'm going to get onto it. But what would drive the stock price up from here is evidence of a recovery. So let's get into their financial statements and let's point out the red flags. If there's any positives, we'll put them in, but I don't think there will be too many. So let's look at their revenue. So overall, their revenue has increased over time, which is good. However, the problem is, their revenue has been kind of the same for the past 3 years. There was obviously a huge surge between December 2021 to December 2022, but obviously that is likely to do with the fact that they probably ramped up production. Finally got their business going. So in terms of the revenue, I'd say there's not really much to dissect here. They're a fairly small company. Relative to their market cap, their revenue is not great. It would translate to 14 times sales. So, on a PS basis, valuation is poor. Okay, now let's move on. Now this is really where the red flag shows up. They have negative gross margins. Basically what this means is for every vehicle they produce, they lose money. They lose money for every vehicle they produce. Which again is a big red flag. Now, Rivian Automotive is also quite similar, and I think Tesla was also like this as well. Let me just see if I can find it, because there was a point where Tesla also had negative gross margins, but eventually it improved over time. So the right one here. Okay, I won't be able to find it on here, but let me see. I think if I switch it to Nasdaq data link, they'll show me more data. Okay, there we go. Sometimes it lags when it happens. But anyway, yeah, so if you go as far back as like 2008 and 2007, they did have negative gross margins at one point. This was around the recession periods. But as far as I'm concerned, that's the only time they've had negative gross margins. Yeah, so that's quite literally the only time they've had negative gross margins. So even with Tesla, it's not really common. I know that they had struggles with their operating profit margins for years. Like for example, if you go to even just like the past 5 years, you can see that they've struggled with their operating profit margins. But on a gross margin basis, I'm not seeing the issues with Tesla. But Rivian Automotive and specifically Lucid in this case have poor gross profit margins, and it's quite significant. It's like, it seems that their cost of revenue is nearly 3 times higher than the actual revenue, and the improvement doesn't seem to be very consistent either. So there's no rapid improvement there. Now, if you look at their selling general admin, basically the company expenses, the salaries, their salaries are actually higher than their revenue, which is insane. So basically they pay like the CEO and the employees more money than they actually generate from their cars, which is insane. So employer salaries higher than revenue, another big red flag. They spend, again, more spent on R&D than gained on revenue. So again, when you see these happen, they're gonna have to burn their cash. So overall, when you put it together, the operating expenses are higher than the revenue, and they were already gross margin negative because the cost of revenue was higher than revenue as well. So ultimately, they end up with some pretty poor operating margins that have not improved. Then we've got some kind of taxing expenses that come into play that I don't think are too important, because these would be quite similar. So yeah, there we go. When you include all of that, you get their net income, all the tax expenses, interest expenses. So the net income is quite similar to, well, actually it seems to be, if I'm not mistaken, they actually have gained money via interest expenses. Well, they have to be positive, so like they actually received interest, and then there's a non-operating income that they gained as well. So they've had net gains here that have contributed to a better net income than a better operating income, which is why their profit margin is better than their operating margin, but again, it's still horrible. And then they dilute shareholders. So because of the fact that they perform badly in the gross margin department and the operating margin department, they have to issue convertible debt or to finance the operations. So if we go to the balance sheet, that's not right, it'll be the cash flow, sorry. We will see here that they obviously will be issuing more debt than they pay back. Hold on a second. Let me just check their balance sheet again. How much debt do they actually have? They're at 2.4 billion in debt. They have more cash than debt, which is positive, but the thing is, again, if their cash is decreasing, it shows that they have to burn cash to operate. So yeah, maybe the issuance of more debt may not be happening aggressively, but they have to burn their existing cash to operate. I have TTM figures here, which might confuse things. But yeah, the dilution of shareholders is fairly consistent. This implies here that I think they issued what looks to be 8 million shares last quarter. Okay, it says 11 here. But yeah, like I said, obviously the number's not going to be super accurate. But the point is here that Lucid's, should put here, shareholder dilution. And then, let me see, burning cash and cash equivalents. What else can I identify here? Yeah, the debt hasn't increased all that much, to be fair. But as I said before, it could get to the point where they might have to start to increase the debt, take on more debt. Let's see. So yeah, I think that's pretty much the key here. Those are the issues. Let's see what ChatGPT says when I verify with them. It's them to verify it. Yeah, I think that's pretty much accurate. That's pretty much to avoid Lucid unless they can demonstrate that they can improve their gross margins. Until that happens, because that's the main thing here, they will potentially be uninvestable, aka dead money.